With Bitcoin specifically, are you worried that Bitcoin hasn't kept up with gold's performance?
I think it will catch up. I think, as I've mentioned before, and as you would agree, all of these are ultimately driven by flows. We need buyers in the marketplace. And I think it's inevitable that there will be more buyers at the institutional level for Bitcoin adoption, but we have to move that agenda with a little bit more focused deliberation. I do think that's why when we talk about gold in the context of Bitcoin, the first prong that we all attach to is whether the strategic reserve can be allocated to actually buy Bitcoin for the US, in which we are sitting on a bunch of paper gains with gold in particular, right? Because gold has been marked at the treasury at $42 an ounce. And we all know right now it's trading at $38.50. That's 100x, right? That's 100x that we're sitting on. And if you do the math, that's a
great investment.
hugely profitable investment, and reflexive in some nature as well as to what the US was able to accomplish with on the back of the dollar. But there's $1 trillion of basically paper gains, right? And $1 trillion actually, it sounds big to us, but it's probably not that big in the grand scheme of how indebted the country itself is, right? $33 trillion of US debt out there. So $1 trillion, maybe it's actually not that big of a reval event anymore. So this is kind of, I think, the tension as to do we do it, do we not do it? If we do it, it doesn't move the dial that much. But the thing that is really interesting then is, hey, what if we then actually do find a way to find liquidity, a funding-based liquidity on the $1 trillion of gold and buy Bitcoin? And $1 trillion of Bitcoin is actually hugely impactful for the Bitcoin market. And so if there's a way to unlock the ability to build leverage on the paper gains of gold to take a call option on Bitcoin, there's something incredible here that could happen. And the math is pretty simple. If you own Bitcoin and you assume that it's going to go up by 12% a year, you'll make a 30x in 30 years, right? I mean, it's actually going to be able to cover most of the fiscal deficit hole that exists. And if you think it's actually going to go up by 40% per year, which is what the CAGR has been otherwise annualizing, it's 10 years. So the idea of having a gold revaluation event that's Bitcoin aligned, I think is really the most interesting political and economic story that reimagines the opportunity set to be so much bigger than what even MicroStrategy.
Here's what's interesting to me is, let's say that works exactly how you just described. You've got gold, it's got paper gains, you borrow against the gold, you go and you buy Bitcoin. And maybe it's not $1 trillion, maybe it's 200 billion, whatever the number is. It would be a big number. That seems like if it was an investment firm making this, maybe you have an investment committee, but that seems pretty hard to like, hey, we're going to lever up this thing and we're going to buy it, whatever, right? Kind of decision making by committee is usually not aligned with we're going to take risk, right? A family office, no brainer. Like some person's like, hey, we're going to do this. They issue the order, it gets executed, done. A company where like a CEO has voting control. Okay, got it. The government is like the extreme of management by committee. So it almost begs the question of like, does the president of the United States just have to issue the order and figure out, can the executive branch do this unilaterally without being stalled or stopped by the rest of the government? Like, to me, that is the only path where you get something like that done, because the second you get Congress or the Senate talking about this, stop, right? Like, right. You know, first of all, you're going to have somebody who's like, the gold's not there, right? You can have another person who's like, we have more gold than, you know, we told you about. And you have a bunch of people who are like, why do we even own gold or Bitcoin? You know what I mean? Like, it's just like too many people involved. So is that the answer, is like Trump just has to like issue the order?
I think the executive path is a great starting point to create a watershed moment, but the optimistic person in me believes that no democratic coalition is truly bought in until a legislative motion, because I believe that US citizens are ultimately the shareholders of US government as a construct of what a corporation could in itself be. And so doing it legislatively is the ultimate path for broad-based adoption that's ultimately irreversible. The problem with the strategic initiatives is that they can be unwound by the next person if they find it to be politically challenging, whereas a legislative approach is a permanent output. And actually, I think that's what we all should aspire for. It's part of the Bitcoin movement. It's why you and I and everyone does the work of trying to make people understand Bitcoin better, not just as a way to store wealth, but the social mission behind it. Because one of the reasons gold, I think, has won so far is because that narrative has been unchallenged by almost a global level. Gold is the store of wealth, and it especially is a store of wealth for sovereigns. And I think if we're able to kind of channel that conversation to it being the same for Bitcoin, then it's really only a matter of time. And going back to kind of my example of having all this gold in my closet, in my vault, I don't like it. I think there's a lot of risk with it. And I'd rather own something else kind of in a way that I can hold to myself in a sovereign way, a line of code I can memorize, give me a lot more peace. Comes with risks, of course. Some older people like physically touching stuff. I don't need to think about physically touching stuff. So for me, it works. And you know what? Young people are mentally more able to do things that older people can't. And so the trend of young people understanding digital store of wealth, to me, is the big picture here.
Bitcoin is living, breathing software that continues to evolve. And we have seen people maliciously attack and try to make changes. We have seen people make pretty consensus-driven upgrades and improvements. We have seen forks. We have seen debates. We have seen all kinds of things that to the average investor who's just buying maybe the Bitcoin ETF, they're completely oblivious to this stuff. But I think people in the community are like, hey, there's very material, important debates and changes happening here. How do you think that plays into the investment case moving forward?
I think it plays a lot. I think it's actually the incredible opportunity of Bitcoin and its greatest fallibility, which is that when I was pitching Bitcoin to investors at Bitwise, easy parallel you would draw is Bitcoin being called digital gold. But I think all those who know crypto well enough know there's an asterisk behind that, which is gold, to your point, is physically immutable, but Bitcoin actually is a living, breathing code that actually does require stewardship and maintenance, which is why there's developers and nonprofits that actually take part. They have to run the clients. It's supported by miners. There's different mining pools, and there's actually kind of an economic activity behind the endeavor of the final output that is a Bitcoin block. And so, I also thought one of the reasons maybe Bitcoin may not be accelerating as much as gold, I don't think this is actually the case, is that there is so much internal drama right now within the Bitcoin community about very small things that has captured the imagination for some of these technological / existential philosophical risk questions. So in some sense, maybe it's a little bit of a disservice to our own community that we do it so openly in a way that is all about public information sharing towards a community-owned project. But at the same time, if I were outside and I was a BlackRock ETF buyer and I listened to the conversation that's happening between the Bitcoin developers, I might say, hold on a second. This is crazy stuff I don't understand at all. What is a spam filter? I don't understand what a relay policy is. And this doesn't sound anything like I can hold in my hand. And then it's very dissuasive, actually. And so the line we have to walk is being thoughtful about why this is actually an important conversation. And it's a conversation that helps us future-proof Bitcoin as the ultimate store of value, which requires work and education. And it's time to kind of level up, but at the same time, do it in a way that's cohesive and one that shows a unified front across the Bitcoin community. And that's always been the fun part of the social mission of Bitcoin. There's always cycles of investors and developers coming for different missions as to what Bitcoin represents in the moment of decentralism.
Bitcoin world who are like, hey, gold and Bitcoin both are the solution to the same problem. Why is gold going up and Bitcoin's not? Are you worried at all? Or how should we think about this?
Gold's definitely been the story of the year. And I think at some level, there's a common parallel with Bitcoin, but there's also a distinct tone that's quite remarkable to gold itself. And I think to understand that we have to return to some geopolitical, some history, and recognize that at the end of the day, these are driven by market participants and buyers and sellers, and ultimately flows that take dominance over what I might even argue as just facts that we can observe technically speaking. So big news this week that the U.S. Treasury's Bitcoin reserve, gold reserve has actually hit $1 trillion. That's a big number, and that's because gold is now at 38.50. At the other side of this is the fact that the U.S. reserve of gold is actually at a 90-year low. This they did not report in the mainstream media, and here I think lies the dilemma. Gold is going higher, but the U.S. share of its gold reserve at a global level has decreased to a pretty low level. And this is the tension. And I think people like to talk about the price of gold, but the other dimension we need to consider is the relative level of gold's ownership across the geopolitical arena beyond just the absolute price itself. So I think this is partially why we're seeing such dominating flow with gold narratives, because there's active geopolitical participants, namely China. China has been very, very active in the marketplace in wanting to exert some influence on the dollar hegemony, but also have now actually taken action by purchasing gold directly in the marketplace. So I think there's a lot of moving parts here, but ultimately the salient facts are that at one point in time, post-World War II, the US had over 50% of the world's global gold reserve supply as a central bank, and now it's less than 20%. So who's making up for that compensation on their side? Likely China and many other BRIC countries in the lead. And I think that sets the backdrop for the conversation in gold that is, at this point in time, different than Bitcoin's adoption story to come on the institutional front.
You know what's interesting is there's a storyline in there that has not yet got enough attention. London has ceded the epicenter of gold to Shanghai. I saw that London has recently dropped out of the top 20 for IPOs, and Mexico now has more IPOs than London. It does kind of feel like the museum of Europe in this financialization of the world and the proliferation of the internet. Actually, London, of all places, has been hit pretty hard in a relative comparison, right? There's still plenty of economic activity. There's still plenty of financial institutions and all this stuff. But then you also can look at like anecdotes of, Dubai is basically, leeching as many people to move there with tax incentives and various other kind of economic policies that people just say, well, why don't I just move there and I'll just pay less tax? Like it does feel like London is under attack. They just might not know it yet. And you can kind of see all these data points that show up in global finance.
Yeah, it's so interesting. I think also this is more of like a sociological comment than economics, but maybe there's just in history a transition of wealthy countries who then exhibit the ability to dominate on the cultural front where they build social capital that actually is just as important and long lasting. And so what you see with most of world history is rising economies are backed by some economic and military might to which they're able to then produce culture. And if you believe at human civilization, the greatest output you could have is incredible culture. Culture can pay dividends for thousands and thousands of years. I remember going to Italy with my parents and, my dad, having worked in Korea and watching the economic miracle of South Korea through the lens of Samsung, would comment how incredible it is that Europeans can literally just live off of culture. Mm-hmm. That there's infinite tourism, infinite people interested in distribution efforts by aligning themselves with the cultural mindsets. And actually, it's the greatest asset that Rome has ever left behind. Mm-hmm. And they still live off of it. So maybe part of the trend we're seeing here is the US is a relatively new country, right? Our culture is a global export today, but it's nowhere nearly as secure. And China, above all, today does not win the culture war. There's actually no one in the world who would look at China to say their culture is exactly what I want to adopt. I like their aesthetics at my home. I like the way of thinking. I like their TV shows and comedies. There's literally none. So I think it's maybe a gradual evolution that we get to see. And Europe has, for better or for worse, been in the leading space for much of human civilization.